Xpeng Inc. analysis. Hello, everybody. This is Stockerfinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at Stockerfinance for more information. Today, we're going to be analyzing this company that is going to be IPOing very soon. It is a Chinese EV manufacturer, ticker symbol XPEV, or it's soon to be ticker symbol, I should say. So what is Xpeng Inc? Well, it's an electric vehicle maker located in China. It plans to compete with NIO and Tesla, as well as other electric vehicle companies. It's currently backed by the Chinese company Alibaba. Its ticker symbol is going to be XPEV and listed on the New York Stock Exchange. It's offering cheaper electric vehicles, which is one of its main competitive advantages compared to other auto manufacturers. So a quick summary of the IPO before we go ahead and look at its Form F1. XPEV is going to sell around 429.8 million Class B ordinary shares. It put a placeholder number of 100 million as amount it expects to raise in the IPO. I suspect it will be much more than 100 million though. It raised around 400 million from Alibaba and wealth funds ahead of the filing already. And according to Crunchbase, XPEV has received over 2.6 billion in Series C funding, which is pretty amazing there. It's quite a bit of money. So anyways, if we compare this to past IPOs from Chinese automakers, such as NIO Inc. on its ticker symbols NIO, you may have heard of it. It raised $1 billion back in 2018 from its IPO, and its shares have actually risen 234% year to date. It's been fairly successful there. In the last month, however, I didn't even know this, but a Chinese EV maker, Li Auto Inc., NASDAQ, its ticker symbol is LI. It raised $1.1 billion in its IPO. So this gives you an example of what we might expect Xpeng to raise in its IPO. I suspect it'll probably be around $1 billion. Now, the U.S. Senate passed a law in May that seeks to delist Chinese companies on domestic exchanges. And there's a lot of risk around this company. So its financials might seem okay. There's some other stuff we're going to look at. The price that the cars are at, it's already delivering vehicles. There's a lot of good things about this company that I really like. There's also a lot of risk associated with it that you need to be worried about or just kind of be aware of before considering investing in this company during its IPO. So the U.S. Senate passed a law in May that seeks to delist Chinese companies on domestic exchanges. The EV maker addressed the law in its filing, noting the legislation, quote, may have a material and adverse impact on the stock performance of the China-based issuers listed in the United States. So yeah, definitely a worry there with a lot of the Chinese-United States tensions going on. We're going to talk about that a little more. For now, let's look at its product and take a look at what it's actually selling. So first dive to the G3. It's an SUV. It's selling for 162,800 won, which is, we'll translate that in a second into US dollars. That's post-subsidies retail price. It's post-subsidies retail price for the G3 460i is, it's only 149,800 won. So I'm guessing that's just a lesser version of the same vehicle. Here's a kind of another look at it. It has Xpilot 2.5, kind of a version of autopilot similar to Tesla's auto parking. So intelligent parking, which is really cool. AI voice interaction, 2 safety verifications. So their goal is to create a smart electric vehicle, very similar to Tesla. And you're going to notice that there's a lot of similarity to Tesla, even just in the look of the vehicle. So it's the longest range compact SUV with 520 kilometers driving range, which I believe is around 400 something, upper four or probably mid 400s in terms of miles. 300 minutes for full charge, 30% to 80% charging efficiency, CATO battery, and an IP68 proof, which just means it's waterproof and dust proof. I think that's just how resistant it is to those different weather situations. Here's another look at the electric vehicle here. So the G3 on the side looks very similar to the Tesla on the interior. Very minimalist design with the console in the center, the big screen iPad looking thing in the center. The one on the right, however, it's sedan, which looks very sporty, kind of similar to a Model S in terms of its looks, a little different though. It has a different look on the inside. Now, it has a screen that goes all the way across the, kind of embedded in the dashboard, and then all the way across to the driver's dash, which looks very interesting. I actually kind of like that look, not gonna lie. The iPad's probably a little easier to reach, and it's nice, but I kind of like the look of the other one as well. And if they want to differentiate themselves, they might want to switch to producing those as well, or doing more of that in future vehicles. I know they're already starting to deliver a lot of these, though. So here's kind of a look at 360-degree perception. This has to do with, its autopilot, self-parking. So ultrasonic sensors, cameras, radars, very similar to Tesla. Here's a look at its motor with the battery, how that works. It's kind of a random photo for my engineers out there. Now here's prospectus, what we're really trying to get to here. Now the mission is it's driving smart EVs, transformation with technology and data. It's shaping the mobility experience of the future. So solid mission statement there. An overview of this company. They're one of China's leading smart electric vehicles or smart EV companies. They design, develop, manufacture, and market smart electric vehicles in China. Xpeng was founded in 2015 with a vision to bring smart electric vehicles to Chinese consumers through innovation and autonomous driving to bring connectivity in core vehicle systems. Today, we are a proven leader in the rapidly growing smart electric vehicle market, producing popular, environmental-friendly vehicles, namely an SUV, the G3, and a four-door sports sedan, the P7. Our smart EVs offer attractive, desirable performance coupled with safety and reliability. According to IHS Market Report, the G3 is among the top 3 best-selling electric vehicles in China in 2019. The P7 offers an NEDC range of up to 706 kilometers, 439 miles on a single charge, which is actually pretty impressive, which is the longest among EVs that are produced in China based on the MIIT NEV catalogs, whatever that is, not really aware. So their smart EVs appeal to the large and growing base of technological savvy middle-class consumers in China. We primarily target high-end segment in China's passenger vehicles market, prices ranging from 150,000 to 300,000 RMB. And if you want to take those prices and switch them into US dollars, 150,000 on the low end equals $21,546.15. 300,000, $43,092.30. So pretty cheap vehicles. And a lot of that price has to do why it's so cheap is because the manufacturing is so much cheaper in China. Labor is much cheaper. Parts are all there, so they're a lot cheaper. A bunch of different things going on there. And they also have a lot of support and probably benefits from the government as well as Alibaba with its influence there. So the Tesla's price, though, if we want to compare this, its base Model 3 with savings is $31,190. So it's the Xpeng's cheapest model is around $10,000 less than the base Model 3, which is pretty impressive. And the most expensive Teslas, we know the model, like the high-end Model S or Model X, can be near $100,000 after savings. And or even with savings as well, pretty expensive luxury vehicles. And the most expensive one we're looking at here with 300,000 RMB is around $43,000, so about half the price of the most expensive Tesla. So they're really offering these significantly cheaper prices for the Chinese consumers. And I think that's really interesting. I think it's a good market to go off of. A lot of people are going to have moral implications and wrongdoings with this company that's kind of, taking Teslas and just kind of, making a Chinese knockoff of it, essentially. That's what a lot of people have been criticizing this company for. But I have to admit, if that works for this company, it's still transitioning the switch to electric vehicles. It's going to be selling more electric vehicles, getting more people to buy them, and people who can actually now afford them. So although you can criticize this company for doing some of that stuff, I think Elon Musk would be happy that this company is helping to transition the transition to more electric vehicles and sustainable energy. And I really don't think it's going to affect the demand of Teslas in China whatsoever. So as of June 30th, 2020, they had 3,676 employees in China and the United States. As of June 30th, 2020, approximately 43% of their employees focused on research and development, of which 66%, 17%, and 17% were dedicated to automotive design and engineering, autonomous driving, intelligent operating system, respectively. Their strengths, we believe the following strengths will position us, or there's following strengths position us well to capitalize on the opportunities of a rapidly changing passenger vehicle market, anticipated consumer demand for smart electric vehicles in China. They're a leading company in smart electric vehicles, great to drive, great to be driven, deep software, etc., etc. Their strategies, they're going to continue to invest in advanced technologies and advance our technologies, etc. This is just their pitch to trying to get investors to invest during their IPO and to raise capital. That's all this really is. The rest of this also has to do, after we go through their financials, most of the Form F1 just has to do with the risks associated with investing in this company. And there's a bunch of different risks, and I'm going to talk about some of those, including just the tensions with China, between the United States and China, regulatory measures going on, and a lot of the risks associated with this company, I think largely just to do with politics and government, not necessarily its performance as a company. So some other risks are uncertainties related to autonomous driving, ability to compete in the industry, changes to government subsidies, economic incentives, and government policies, which I think the changes to, governments, the political environment, and economic policies, not just of the PRC, but also of the United States. Already China's having tons of tensions with China and India. Even Australia and China are having some tensions. Throughout the world, China's really been, the center of attention for a while now, especially with United States and China just going head to head right now, and with a trade war going on. The relationship's definitely a little rocky, with TikTok potentially getting banned in the near future. Alibaba facing some criticism as well. There's a lot of stuff going on for Chinese companies that's looking a little rough. So to IPO right now, there's definitely a risk involved that if the United States was to say, hey, you're not allowed to list on, American stock exchanges, that's going to plummet the price of the stock. And also, if you want to sell, it's going to be completely illiquid after it IPOs. Or if you want to buy the stock, you're gonna have to go to a Chinese stock exchange, exchange your currency. It's gonna be a complicated process to do. So there is some risk there involved with investing in this company. Now, recent developments, this is interesting. They actually delivered a total of 2,451 smart electric vehicles in July 2020. This includes 1,641 units of the P7 and 810 units of the G3. So the P7 is definitely the more higher selling vehicle right now. I believe the G3 might be a little newer. I'm not sure exactly when they released it, though. Correct me if I'm wrong there if you have more information on that topic. So that's a pretty fair amount of vehicles to deliver in July. It's not a ton, obviously, but it's a decent amount for a company that's pre-IPO right now. Now, in August 2020, they completed a Series C round financing. They issued an aggregate of 207 million Series C preferred shares to investors and received 900 million in proceeds from the Series C round financing. That's a really incredible amount of capital. They have a lot of capital to work with, especially with backing from, Alibaba, as well as other big wealth funds, especially some Saudi Arabian wealth funds who just have a ton of money that's hard to fathom. And investing in this company, they're going to have a lot of backing for that, which is going to give them a lot of power. And especially, it's going to take a lot of money to operate in the US and to ramp up. As we've seen with Tesla, it takes a lot of, capital and a lot of stress and pressure to do that. So if they're going to do that, they're going to need a lot of capital, and it looks like they're getting that, which is a good sign for this company. Now, they have an interesting corporate structure going on. Here's a graph to kind of try to simplify their structure. Their holding company, which was registered in the Cayman Islands for the United States, that's the Xpeng Inc., the company that we're investing in. That's well known, and it's kind of a holding company of all these little subsidiaries from it. So you have Xpeng AI Limited, which then goes into X Motors in the US and X something, and it's really complicated. And if you could help explain this better than I'm trying to right now, because to be honest, it's hard for me to fully grasp. This is a little out of my range here, although I'm still trying to understand it. It's just a very confusing process when you're IPOing as a foreign company in the United States, especially from a country like China. So there's a lot of different things going on, a lot of subsidiary companies, random holding companies that help transition from the United States to China, etc. So a lot of different stuff going on here, but nothing too much they have to worry about if you're just a regular retail investor. But if you can explain this better than me, please do in the comments below. I'd love to hear it. Now let's look at the CEO. Xpeng. I'm pronouncing that horribly. I apologize, man. If someone can help pronounce that better, or just put kind of an abbreviation of how to pronounce it in the comments below, that would be awesome, because I'm definitely struggling there. So he's a Chinese entrepreneur. He's best known for co-founding companies, including Xpeng Motors, the one we're talking about, as well as UC Web. Now, he actually sold this Chinese mobile internet software and service provider, which he co-founded in 2004. He sold it to Alibaba, which was acquired by June 2014. So 6 years ago. And apparently it was the largest M&A deal ever in Chinese internet history, which is pretty incredible. After acquisition, he was named president of UC Web and president of Alibaba Mobile Business Group. Now, I believe the deal was around $4 billion US. That's how large it was. So a huge acquisition there. The good thing about this, because Alibaba acquired that, and because he had a bunch of ties with being the president of the Alibaba Mobile Business Group, as well as, serving president on Tudo and Ali Games, he has a lot of connections with Alibaba. And so Alibaba's been really helping him back this automotive company. And having that backing from a massive, one of the biggest companies in the world, is a really good sign for this electric vehicle company. And for him to have already sold a company to Alibaba, to have gone through that, is a good sign as a CEO. But there's really not much else on him besides the little bit about his childhood. He graduated from the South China University of Technology with a bachelor's degree in computer science. Not saying too much there. It's kind of hard to get a lot of information on him. If you have more information on him, I would love to know it, because I really love to know the founders and the ones who are running the company. As an investor, it's important to understand who that person is and whether you think or believe that they're going to do a good job and be an effective leader for this company. So here's an implication, kind of another risk associated with potentially investing in this company. They are an emerging growth company, and that's because they are a company that has less than 1.07 billion in revenue for the last fiscal year. So with that, they qualify as an emerging growth company. There's a bunch of different acts, the Jobs Act, bunch of different things that allows them to take advantage of reduced reporting as well as other requirements that are generally applicable to public companies. So these provisions include exemption from the auditor attestation requirement under Section 404. There's a bunch of other stuff too that I'm trying to look through. There's just a bunch of stuff going on here in terms of the financial reporting. They just don't have to report a bunch of different things. They don't necessarily have to comply with any new or revised financial accounting standards until such date that a private company is otherwise required to comply with such new or revised accounting standards. So it is interesting. They said they have opt out of this provision, as a result will comply with new or revised accounting standards as required that they are for public companies. But again, just know that sometimes they don't have to be fully honest on some of their accounting measures, some of their numbers that they're going on. They can't keep stuff secret. So investing in a company like this, in a public company, I love it to be as transparent as possible, and not knowing everything can be a little bit worrying. But according to them, they're going to, keep along with the rules. As they said, they elected to opt out of the provision. So we'll see what happens there. There's a bunch of different regulatory rules, a little weird things going on with the Jobs Act that I can't even explain in this video. It'd take too long. So anyways, just a little thing to watch out for when investing in this company. Now let's get to the numbers. This is where it gets really interesting. So first off, let's look at their total revenues. So RMB, those numbers are in Chinese yuan. And then we look at, we're just going to be looking at the United States dollar here. We're not going to be looking at yuan. We're going to be measuring in dollars. So just look at the columns on the right of the 2019-2020 graphs, just so you don't get confused there. So total revenues, at least in 2019, ending the year in 2019, were $328 million. And their expenses, total operating expenses, however, were $457 million. So they're not profitable yet. Their total operating expenses were extremely expensive there. Their vehicle sales seem to be on track this year. Now, it's only 6 months into 2020 right now, so that's why it says 141 million in revenue only right now. So it seems like they're about, that's about halfway to 328. They're about maybe a little behind, slightly on track with COVID. That's definitely good to be on track as of, with its 2019 revenue goals there. So we'll see what happens. I don't think they're going to grow too much this year. Depending on when its IPO happens, they might get some more traction. Their brand might grow a little bit, which could increase sales throughout the world, or at least in the United States and China as well. We'll see what happens, though. Definitely interesting. Not too much else to say there. Their operating expenses here, it definitely has decreased substantially. It appears, or their gross loss at least has decreased substantially. It was 79 million as of 2019, and so far all the way halfway through 2020, it's only been 5 million. So that's significantly less than what it was in 2020 if they keep on this trajectory, but they could increase it. Who knows? A lot of the expenses has to do with research and development. So research and development, they did 293 million in 2019, and now they're at 89 million. So they cut back on that quite a bit, which I think is helping them out there for their expenses. Now, if we look at their other balance sheet stuff, the good thing here is that their total assets are larger than their total liabilities. They don't have an insane amount of debt here. They have 1.3 billion in total assets, 900 million in total liabilities of 2019. And in 2020, at least 6 months into it, the good news is now they're up to 1.3, so a little more, 19 million more in total assets. And it actually decreased their total liabilities by about, about 20 million US dollars. So their liabilities seem to be going down. Their total assets are going up. That's a good sign there. It appears that their cash, which we're going to look at in a second here, I'll save that for the next slide here. But yeah, so total liabilities are decreasing, which is a good sign. Total assets are increasing. You always want that ratio to be very nice and steady there. And it looks like their short-term borrowings decreased quite a bit, or I guess it's about the same since only 6 months into the year. But yeah, not too much else to look at there, but that is a good sign that their liabilities are decreasing while their assets are increasing. And the majority of their assets, again, has to do with their property, their plants, and equipment. So if you're a preferred shareholder, which, most of us probably watching this video are not preferred shareholders. But if you happen to be that, the good thing is if this company were to go bankrupt or something were to happen, they had to shut down the company and liquidate the whole thing, you'd most likely get most of your money back due to the assets outweighing the total liability. So you get a lot of your capital back after they liquidated all the equipment, with all their cash on hand, etc. But as just a regular retail investor, nothing really to worry about there. At least it's not too alarming is what I'm trying to say here. I know I'm stumbling on my words a little bit. Now let's look at their cash flow data. So the most important thing on here, at least in my opinion, happens to be their cash and cash equivalents, as well as restricted cash at the beginning of the year and at the end of the year. So at the beginning of 2019, they had $230 million in cash on hand, and then they had, at the end of the year, $340 million. So they increased their cash by about $100 million there, which is a great sign. Now, they began the year in 2020, $340 million, obviously, and it's actually decreased to about $268 million. So they fluctuated quite a bit there with their cash, and I believe that just has to do with the IPO process, a bunch of stuff going on. Perhaps they're trying to ramp up vehicles, but clearly they spent around $100 million of their cash there since it decreased to about $268 from 340 at the beginning of the year, and it's only 6 months into the year. So it's kind of interesting. I'm curious as to what they spent all that money on. I was kind of scouring through this entire forum, and I couldn't really find what it was. Once they go public and have their first earnings release, hopefully they'll explain that more on the call or something. I don't know. It's going to be interesting to see what happens there, but I'm definitely curious. So here's a little more about how they operate. And this is interesting. Instead of building their own factory up from the ground like Tesla has with its gigafactories, they actually have a relationship with Hyma Auto, which is a manufacturing of automobiles in China for the G3. And they may utilize Hyma plant to produce other models in the future. So they have a contract manufacturing arrangement with Hyma Automobile Group, and it's a China-based manufacturer. It's for the manufacturing vehicles, obviously, and it says that the agreement is expected to expire on December 31st, 2021. So about a little less than a year, or about a year from now, a year and a half from now. They're probably going to renew that as well. It doesn't seem like they plan on building their own factory. Instead, they're going to rely on them for this manufacturing experience because they have a lot of resources and experience in doing it. They've been around for about 3 decades now. So, well, interesting. It's going to be interesting. They have the option, apparently, to utilize this plant to produce other models in the future. In China, I think this makes a lot of sense because there's just so much manufacturing power there and so many factories already set up that building a new manufacturing plant is not necessarily needed for them. But again, to vertically integrate, it might make some sense to do that if they want to produce in the US and instead of having to ship cars over, have a direct manufacturing plant here. But I don't know. It's going to be interesting to see what happens. Again, this only gives you so much information, with these forums are really to show you all the risks and then to convince you why you should invest in this company. That's essentially all these forums really are. So it's kind of hard to make an exact decision of what's going on here with this company before we can know all the data and all their different moves they're making as an investor once they go fully public. So here's my opinion on the company. Should you invest in this company right now or right when it goes public? I don't know. It's hard to say. I'm not going to say yes or no. I think you should make your own opinion on that. Personally, I think it's a little questionable. Definitely an interesting company to follow, though, especially if they get more better into the future. They're a legitimate company. They are producing and delivering vehicles. As we saw, they're continuing to innovate. It looks like their range on their batteries was pretty substantial. It was like 439, I believe. That's pretty great range there for their vehicles, offered at great prices as well. So in the China market, I think these vehicles are going to continue to sell very well as they ramp up. I don't think it's going to be a huge detriment to Tesla if you're worried about that, if you are a Tesla investor. There's a lot of risks involved with this company, though. Government regulation, US-China tension is probably the biggest risk I'm worried about. And it's not yet profitable. They're on their way to profitability, I believe. So it's going to be interesting to see. Their liabilities were going down. The balance sheet looked pretty decent for a pre-IPO company. They have tons of backing from large companies. They had lots of cash. And they got $900 million they raised in funds, which is fantastic for them. And they're going to raise probably $1 billion more from their IPO. So going to have a lot of money and capital to work with, and we'll see how they use it. It's definitely going to be interesting. Thanks for watching. Please subscribe. Make sure to check out these videos as well, and follow me on Twitter at Stockerfinance for more information and for just financial news, and just to chat with me on there if you have any questions. Anyways, this is Stockerfinance, and I'll see you guys in the next video. Peace out.